Bitcoin is number 10 in the world, right? Ethereum's number 34. And its market cap at the time of recording is like 1.2 trillion with a T. It reversed gravity or entropy or whatever external force is on the world with large market cap assets, and it got to the trillions. And the Bitcoin bull says it's actually on track to surpass the number one asset on this chart in the world, which is gold, at a $16.7 trillion market cap. And so it's on that trajectory. And I think a lot of ETH bulls have been, well, if Bitcoin, can achieve these heights, then why not Ethereum? Because Ether is like Bitcoin, except better, except more programmable. I guess maybe this gets into your take on whether Bitcoin is actually worth 1.2 trillion, but I'll just open up that question and get you to respond. Why is this possible for Bitcoin and not Ethereum?
Yeah, so the entire value proposition of Bitcoin is that it is a special snowflake. It's sound money. It's the first one. It's simple. It doesn't do anything. Risk of breaking is low. Proof of work is like objective, whereas proof of stake is fundamentally subjective. You can slice this cat in a bunch of ways, but there's the net of all of them is Bitcoin is special. And even among crypto people, it is generally taken for granted that Bitcoin is special. I reject that premise. I don't think Bitcoin is special, but I understand that I am the weird one and that everyone else in the world thinks Bitcoin is special. So for now, I'm not interested in trying to convince the world that Bitcoin is not special. I will take on that fight at some point, but that time is not today. But look, for now, I understand that everyone else thinks Bitcoin is special. So fine, whatever, that is what it is. Don't hate the player, hate the game. That's the game that everyone thinks. Cool, fine. It is what it is. Ethereum and Solana are obviously not Bitcoin. And they are not special in the way that Bitcoin is, very definitively. And Ethereum and Solana are explicitly discussed as functional things. And we're talking about finance, and we're going to reshape global finance and democratization of access and all these other fun things, asset issuance and tokens and all these things. So the fundamental lens through which you talk about Ethereum and Solana is they are changing finance, the rails of finance and the rails of payments. And so naturally, if you look at BlackRock, Visa, Stripe, there's all these obvious companies that are relevant in the discourse of those two major parts of the economy. And so it's quite reasonable to think of Ethereum and Solana as tech stocks or as growth assets that are competing against, in weird different ways, the list of names I described, as well as some others. And so I think it is fundamentally correct to think of Ethereum and Solana as equities, not in the literal sense of the C Corp and the CEO and the comp structure and all that stuff, but in terms of they have a function, they have a product, there's needs that users have in the world, they serve those needs, and they produce cash flows as a result of that. And so I think of Ethereum and Solana as equities in that kind of sense.
Yeah, one framing that David and I have used in the past for this is just you have the difference between capital assets, which produce cash flow. So these are things like equities, or maybe you have property and kind of rental income. And so that asset is a productive asset. It's a capital asset, right? And then you have other types of assets like commodities, and these are consumption type goods. So these are generally used in the course of making another product. And then you have finally store of value types of assets. And these are things that are the special snowflakes of the world. So gold is a special snowflake, you might say, because it doesn't, throw off any cash. It's not a capital asset. It's not really used that much when it comes to, commodity types of ingredients to build other products. And it's mainly valuable because people think it's valuable. I actually want to just double click on that really quick. I don't know how much this will come up again in the course of the rest of this episode, but I think it's worth asking, because you are a bear at Bitcoin, it sounds like, at a $1.2 trillion market cap. I assume you'd be a bear of Bitcoin, at a $10 trillion market cap as well. You'd be even more bearish. But then my question to you, Kyle, is isn't it enough to have the narrative and the story for an asset like Bitcoin if enough people believe that it is a special snowflake, and if the crypto world believes it's a special, And if Larry Fink starts believing it's special, and if the new incoming president of the United States starts believing it's special and puts it on the U.S. Treasury balance sheet like in a permanent way and starts purchasing it, if enough people think an asset is special, then it actually becomes special. And this is like a reflexive loop that like it's pretty hard to deny, isn't it? Like is it this explanation that would account for the like 1.2 trillion in Bitcoin right now? And are you like disputing that kind of, I guess, law that we've seen in asset markets to date? Do you think that there's something wrong with this?
To answer your question, I need to actually refute something you said as part of it, which is talking about commodities, capital assets, and store value. Commodities are distinct. We have oil, we have wheat, we have whatever, all the obviously inputs into the basic economy. We have capital assets, things that just produce yield, right? And then you said store value is separate and distinct. And I reject the premise that the third category should exist, because I don't believe we should have a reason to have non-productive assets. With the one exception is like cash, because you need a denominator to like denominate things. People need to know coffee is $2 and not 4 bushels of wheat or whatever. It's actually useful to have an abstract concept that is a universal unit of account, which happens to be what the governments tell us it is. And like, I'm not here to fight the government, but I reject the premise that store value should be separate. The fundamental argument that like gold is valuable or Bitcoin is valuable is the government can't print more of it. And I'm like, okay, yes, I understand. But I think that's a silly way to think of store value, because there are plenty of assets that are naturally inflation resistant and that produce yield. The most obvious of which, in the context of the United States, would be Walmart and Amazon. If the price of goods go up, like they raise the prices of the goods. And so like they're like, excluding AWS, I'm talking just like the retail business. And like, it's not a perfect hedge in the sense that like they could become more competitive or less competitive against other retailers, like sure. But like you can, if you believe that, you can buy a basket of retailers. But like there are very obvious businesses, the most obvious are retailers that are intrinsically inflation resistant in like the scope of what they do. Again, not in exactly the same way that gold is or Bitcoin theoretically is, but in a way that is like very mechanical and tangible to how the businesses operate. And I think of like the theory that like gold or Bitcoin are inflation resistant is like strictly on a mimetic basis. And like, yeah, like the gold chart like has some more reverse correlation with inflation than Bitcoin does. Bitcoin has no effective anti-correlation with inflation over any long period of time. Gold arguably does, but like I cannot tell you why that must hold true, other than like hopefully we all keep doing that same trade over and over again in the markets at many $1 trillion scale, which I think will fall apart. So I reject the premise of the SOV as a standalone category. Again, I understand other people, believe it and like I don't really care. You can do it, it's fine. I just, for my own balance sheet management, don't believe that to be the case. Having said all that, I own some Bitcoin, and the Multicoin Fund owns some Bitcoin, which I can get it separately, but I am intellectually short Bitcoin on that premise. I'm not mechanically financially short, but I'm intellectually short Bitcoin. At 1.2 trillion, I will continue to be intellectually short Bitcoin at 10 trillion.
There's something a little bit like Buffett-like about that in that investment strategy,
Correct.
which is like very value driven. Like I think you're just like a productive asset kind of guy. Like you understand value, and that's just kind of like the frame of reference that you invest in. And you kind of think that can actually, the productive asset framework can actually swallow the store of value framework.
Correct. Yes, absolutely. And by the way, I wrote a blog post about this in 2018. I think it was called Paths to 100 trillion or Paths to tens of trillions or something. I'll find the link and I'll send it to you guys. But basically, that's the store value thesis, the utility thesis, or the stablecoin thesis of like how to get crypto assets to that kind of scale. It'll be fun to reflect on that from 6 years ago.
Yeah, and I think another way to think about what you said is you still believe that like humans will want to store their value. They'll just kind of spread it over those two other asset classes of like, capital assets, and it'll kind of be built into the price of capital assets and also commodity assets. And we don't need a distinct separate category of all of these assets that have this one function, which is a store of value. Like I get that, and I get that that's kind of like your world and Kyle's way of thinking about it, and it's also Warren Buffett's way of thinking about it as well. but it strikes me a little bit like it's almost like an kind of like an atheist, like going and telling all of the religious people like there is no God. You have to convince them of that, right? And so like I think that because store of value is such a mimetic human consensus type of game, it's like likely that we'll always have it. This is maybe just how humans are hardwired. Like, would you accept that that idea, even though you're not into it personally? I guess this plays out in your fund in that you don't intend to short the store of value religion, do you, of Bitcoin, and you can understand why it goes up.
I mean, I think at some point we will short Bitcoin in size. Definitely not in the foreseeable future, but like on some long enough horizon, I expect to have a massive Bitcoin short. But that's still pretty far away. So I just sent you all the link to the utility hypothesis blog post. So y'all should probably include it for the podcast when it goes out. It's 6 years old, so I'm sure a lot of the terminology is going to read pretty weird and stuff because it's pretty old. But I think it actually kind of captures the core of the belief, which is that crypto is funny in that like we have this weird path dependency that happened, which is like Bitcoin came out and like it is kind of functionally incomplete. Low transaction throughput, no DeFi, all these other things. Like proof of work doesn't give you fast finality. So it's like very hard to build a functioning financial system on top of Bitcoin. And then the story became, because of the block size wars, like digital money, hard gold, doesn't change, it's stable. We're like, cool. Bitcoin here, special snowflake, yay. Meanwhile, there's an Ethereum thing happened, like some number of years later. And the Ethereum's thing was like, we can make finance better. Because it turns out that having heterogeneous financial rails for payments of different sizes, like whether it's ACH versus credit cards versus wires, and then obviously across all of the various countries with different FX, and then you have all of the asset markets, bonds, stocks, equities, commodities, all of those things that I just alluded to are all managed on separate rails. Like there are separate database servers with separate APIs, and it is really fucking heterogeneous and it's really confusing. And none of them are 24/7. And obviously you have time zones. And so like when you need to move between them across time zones, it like gets very slow and miserable and terrible. And crypto like naturally is global and like the APIs are permissionless. And you have this like core notion of ownership via cryptography. And it turns out that like when you have this cryptography thing with this permissionless consensus, you just have an arbitrary API to represent assets. Whether those assets are commodities, bonds, stocks, equities, fake tokens, meme coins, whatever, it doesn't matter. And it turns out that like it's just much simpler to have a universal API for all assets, right? Like it's just that by definition is true. And so I think the story of crypto, when we look back 20 years from now, will be this Bitcoin thing came out and we're like, digital gold, cool. But really the story will be we built better financial rails. And it will take 10 to 20 years to basically get the rest of the world to acknowledge we have better financial rails, and to start moving assets over. We can see just the beginnings of that happening now with their BlackRock Biddle Fund and Hamilton Lane and PayPal, and you're starting to see this in little increments here and there. And I think that will be a story you'll see over the next 20 years because crypto rails are just objectively way, way, way better than the traditional rails. And so as more and more of that activity moves over to crypto, and then we're also going to have like maybe crypto gaming is a thing. I don't know. I haven't really seen it yet, but maybe DePIN is definitely a thing. And I think will continue to be a thing. And I think most of that stuff is going to happen on Ethereum and Solana, or maybe Aptos or Sui or whatever else, some DeFi smart contract thing. And I think at some point, call it 5 years from now, maybe 10 years from now, most people in the world will look at Ethereum, Solana, Sui, Aptos, whatever, and they'll say, wow, like, this clearly runs the world in like a very literal sense. Like all of the world's assets and finances will be represented on these systems. And then look at Bitcoin, and Bitcoin will be the same thing it is today, which is funny. It's just this digital, rock. It sits under your bed, doesn't do anything. And they'll start to wonder, they'll say, these things have some common thread in that like the assets don't, like live in the DTCC and don't come from that world. And like they use a lot of the same terminology, cryptography, permissionless consensus, like like, I don't know, like why is Bitcoin special and it does nothing and it's worth 2 trillion, 5 trillion, 10 trillion, whatever it'd be worth at that moment in time. And Solana or Ethereum is here, it's worth 300 billion or 50 billion or whatever. At some point, I think people will say, wait a minute, like one of these is a superset of the other and one of them is dumb and one of them is useful. And at some point, that I think will become the consensus view. I don't think we're anywhere near that moment in time.
And at that point, you're going to short Bitcoin. At that point, Kyle. Not until.
Yeah, like I got to see how the discourse evolves, but I do expect to put on a large Bitcoin short at some point.
If you enjoyed all of that, then you'll absolutely love the Bankless newsletter. Join over 300,000 fellow readers, all for free. Click below to sign up.